So, we talked this morning about that loss of 1615 and then going down to 1690, which was going to be right in this particular area, right in here, right? We didn't get up over 1690, so we had originally said, going short from 1690 would have given you this. If you would have gotten in late, you would have been challenged and probably really, really nervous in this area as we came back up. But you can see we tried 2 attempts to get up over 1690. And we, in both of those, we were kind of just flirting around and doing whatever. And, the guidance this morning was, we'd want to be short from 1690. So you had multiple opportunities, right? You had this, kind of cut through here that you're seeing and being able to do something. And then, you had a retest and another retest. And, you don't have any idea that any of this is going to happen, of course. But, when you retest and fail, the third time's usually the charm, but it looks like we didn't even get up. We got up to 60.85 here. So it was weak and, not even looking at vol M and vol D, they were clearly to the downside. And then, so here we go, right? So now we're riding this thing down. And we thought, just based upon the morning analysis with the tools, and let me just show you what I was thinking. So this is from this morning, right? This is Premarket. I haven't updated because, frankly, you don't need to update this thing. If you watch this column almost exclusively, this column will not change throughout the day unless the OCC publishes or Opera publishes updates to the OI chain. This is really my compass here because this tells you where sentiment is going to shift. And in this particular case, I called out this morning that we had this level down here. You can see it says 39.40, and it's on the put side. So we have a dominance of puts down here, and you can see right below it at 40, the 43.88, and then you can see right down below that at the 30 strike. We're even down here at 55.11. So we've got this kind of, on the tens structure, right, of just huge OI, and then it just, it gets 7,000 right down on this level here, down at, what is that? That's on the 60.10 level. So, if we push through 60.40, then that opens up 60.30, which is even further down than I would imagine. But the opening deltas are going to win the table here today, right? So you had quite a bit of negative deltas that were going to be contributed to if we go down. You've got this first stopping point at 60.50, and then another one at 60.40, and then another one at 60.30. Each one of these is successively larger, and so it's going to take a lot of. You can imagine people are going to be hopping on the put train if things are looking pretty dire here. And like we said, the CT very, very negative, right? So this is the raw tick here, and if we take a look right here, even in the USC, we're linear down on the US composite, let alone the ARCX, which is straight linear down. And going back to the USC, we're actually getting like serious unloading by institutions or the large players. That's what this measures here. And you can see that the 52-week new lows is now outpacing the 52-week new highs, which is not a good trend. Given that the green has been, it's not here, but green was above red here, so the 52-week new highs were recovering, but now they're not, right? And especially with lower numbers, that tells you just how weak the market has been as we get going. So we've cut into the ribbon. That's the first thing on the USC. That's usually a bad sign for long positions. The linear down is obviously another tell, that gives you pause, and we're almost ready to cut into the ribbon on the official MTM, which is the ARCX, right? The NYSE, the NASDAQ, and the AMX, and you can see that everything is crossed over. So we're giving up the ghost. If this cuts into here, then we're going to turn off TC3, and that's going to basically hold us off from entering any more long positions in the P2P strategy. Why I bring all of this up is that when we take a look at the morning, right, I made two references this morning that I think are important. So we're down in this area, right? We're in a put-dominated area. And the other thing that I pointed to was if we look at the all expiries on the PM, let's just select all of that, you can see that there's the structure down here below 60, 50, and 50 for the all expiries complex was minus GEX. So what this represents, when you turn all of these on, it represents this strike right here at 60, 50 is the largest delta contribution on the put side of the structure. And so as we move through 60-50, you effectively are introducing a tremendous amount of gamma deltas contributed to from gamma. I know this number right here doesn't look like it's a large number because this was from this morning. In fact, why don't we just go ahead and update this? I'll just refresh this while I'm talking. And what, you can see it says 6,000 this morning, but now we're down here, right? So this is going to be a big number, and we've moved through it, all right? So, so here we are. So here's the 60-50, and now you can see it says 15,000. So we're disproportionately adding over 15,000. These are notionalized to shares. And so we're adding, if you think of the SPX as a share value, a tremendous amount of downside exists now. And it's now in the overhead, right? And with in the money puts dominating the overhead, we've all but lost the overall battle, right? So we're going to have to, this is going to be very heavy, and it's just going to continue to grow, adding more and more charm deltas effectively through in the money puts, as well as whatever's remaining on the out of the money calls, which are decaying. So the in the money puts are going to grow, and the out of the money calls are going to decay, just from an all expires perspective, and it's just going to be a bloodbath. The other thing to realize too, if you look right here, this is the official net delta calculated at this price, right? So the net OI doesn't change. It's just the control of the balance is what it is when we update OI. So these three columns should not change unless the OCC or OPRA issue new messages to us throughout the day, which they rarely do, just as a matter of record. So this isn't really going to change, and the OI isn't going to change. So what does change, of course, is these two columns or any of the Greeks, right? Net GEX and this, and that's going to be spot price dependent. What this is telling you is that we've had a major, major shift above us, which you expect, right? So a lot of calls are now out of the money, way out of the money, and that allows the in the money put deltas just to completely dominate the conversation. But down here, this is really important. This is basically telling us that for the left-hand plane, we've now become put dominated for all expiries, right? And you can see this right here. This is a change, an intraday change. If you go back and look at my notes from this morning, this was call dominated this morning, okay? Why this is important now is that puts are firmly in control. And we see that, right? We see that in the gamma distribution here. But what's more important to you is that the deltas are negative. Right, and what that means is that we've got a lot of downside speculation that's occurring. Now, these are decaying. These are going to be supportive, and they're going to remain supportive for however long they do. But the fact is we've got an overhead heavy amount of puts, and then we've got all of this that's here to new speculative puts to the downside. So just be aware of that, and at some point, we'll get buyers who step in, whether they step in at the 30 strike, the 20 strike, or the 10 strike, or wherever they step in, they'll step in. We're stretching the rubber band really, really far. So I do expect some sort of mean reversion coming back into this. You can see COTMP, which is where folks right now under this structure would where the balance would be for them for in the money versus out of the money puts and calls, looking at the deltas. 60-30 is that number where we would expect buyers to step in, like right around 60.31 or so, given this. And I would expect, maybe this to hold, but as this number drops, we could see more and more, speculation to the downside, et cetera. So, in fact, where are we right now? We are at, okay, we did go down to 60.30. So let's just take a look at this real quick. Let's see, where's TradeStation? Here we go. And go back over here, not that one, go to this one. Yeah, so we did come down to 60.30, just like what COTMP was kind of saying was a key level. It looks like we're getting a good bounce. We're getting a good recovery on the tick here, and you can see where we're coming in. So it looks like the buyers have stepped in, and sure enough, that might be the low here. I was thinking it was going to be the 40 level, which would have been right here, but it looks like we may have had more deltas coming in and pushing us through that that net OI, which from the morning it's hard to tell exactly where the bottom side could be. I could have easily just said it was the 50 and be done with it because that's a Livermore half level, or you could pick the 40, the 30, the 20, the 10, etc. So again, hopefully this is useful and isn't just a bunch of rambling for you. I do think, though, let's see, here's the 50 level. It'll be interesting to see what happens here. It's going to be really hard in my guesstimate here. It's going to be really hard. This is going to be formidable charm growing. In fact, let's just go look at what this looks like right now. So this is pretty sizable in the money puts that are just, and you can see what the gamma distribution is right here, right? So this is where, so all of these puts have already limited, right? They're already at -1 delta, right? So that's why these all end in 0, 0. We notionalize this out to shares out here, right? So this number times 100 gives you the zeros that you see right here. This area here you can take as a rough proxy for all of the second order Greeks. So the second order Greeks are only valid in this area, and so this is the area that we're playing with. And so if you look up and down the chains, you can see very clearly that there's almost an order of magnitude more puts, which are in the money, than we have calls. So of course that's why this is all red here, right? Because the puts are winning the equation, or winning the battle here. And so we got all this redness here, which you would expect naturally, and then that's also reflected in the real-time deltas here. Gamma is all on the put-dominated side, which makes perfect sense because where we would have our last chance of having a positive call-dominated strike is way up here at transition, and it ain't going to go any. We're not going back up there, not yet. I mean, we could rally up there if we start getting that, but we'd have to look at vol M and vol D to get a real good indication of what's going on. We could move lower. If we lose the 30 strike, we could disproportionately add a lot more deltas, and then that would just start eroding on this right now. So big picture, this combined with this tells us we are probably on a short-term pullback, and we'll just it could be several days. We'll just have to wait and see how things go. All right, hopefully this helps understand how to kind of take a short-term assessment here.